If you're about to buy your first home and you're thinking about being pre-approved, there's something that you need to understand first. Some of the decisions you're about to make are hard to undo. Not because they're complicated, but because they don't feel important when you're making them. And that's where people get caught. I've seen it from both sides, from inside a lender and now working as a broker, helping people deal with it after the fact. And there are 5 things that you should know before you ever talk to a lender. And I'll break down all 5 now. So let's slow this down. Most people start here. How much can I get approved for? And once you hear that number, it becomes a target. Everything starts to revolve around that number. What you're looking at, what you think is normal, and what you feel comfortable spending. But here's the part that nobody talks about. That number has nothing to do with how you actually live. It feels personal, but it's not. It's built on a formula. And if you're like most people, you're probably thinking, well, isn't that the whole point of being approved? But it's not. Because the moment that you anchor to that number, you stop deciding what fits your life and you start adjusting your life to fit that number. And that shift is subtle, but it changes everything afterwards. And that's just the first layer. Then this happens. People look at their savings and they say, I have a down payment. I'm ready. But that's not really the decision you're making. Because once you actually buy, the money that you have doesn't just go into the down payment. You still have closing costs, moving costs, and money for expenses that could happen. And what's left over is everything. That's your margin. And if that number is too tight, you don't notice it on day one. You notice it when something goes wrong, something breaks, an expense comes up. Your month gets a little tighter than you expected, and now you feel it. So the real decision is, can I afford this home, and do I have enough money for the down payment? It's how much pressure am I comfortable with, and how much money do I have to have in my account to release that pressure? Most people think they're buying a home, but they're choosing what financial pressure that they can withstand. Now, those 2 things happen in the short term, but this third thing happens in a much larger scale. This one happens in a much longer term. This one matters way more in the long term. When everything feels stable, steady job, same routine, nothing changing. People assume that it will stay stable. But stability isn't how things feel today. It's about how likely things are to change. And here's what most people miss. It's not just the changes you expect. It's the ones that you'd say yes to. A better job, a move that makes sense, an opportunity that you didn't plan for but you wouldn't turn down. That's where stability actually breaks. And if something does change, your mortgage just doesn't change with you. You can't just revisit it, you break it. And when you break it, you don't just change the plan, but you pay for it. And that cost shows up way after you sign the paperwork. It's right when your life is already changing. And most people don't plan for that because they never expected to be in that situation. But that's not even the most expensive mistake. When people choose their mortgage, they focus on one thing, the rate. And don't get me wrong, the rate is super important. And it's easy to focus on because it's visible. It feels like the right comparison. But here's the thing, the lowest rate is only the best option if nothing changes. And we already know that things change. So a mortgage can look good and still be a bad fit for how your life actually plays out. And if I were you, the biggest question in my head right now would be this. Okay, then what should I actually be looking at? And I promise we'll get there. But first you need to understand this. If you don't know what makes a mortgage good or bad, you're not comparing options. You're comparing numbers. And that's not the same thing. And this last one is the part that no one sees. Everyone in this process sees things differently. And the direction you go often depends on who you spoke with first. I've seen it, similar borrowers, similar income, be led to completely different paths. I'm not talking about some small differences here either. I'm talking about completely different paths. Not because anyone is lying, but because perspectives shape their recommendation. What someone focuses on, what they prioritize, what they think matters most, changes what they show. So if you walk into this without context, you're not just getting advice. You're stepping into a direction. And once you start down that path, everything after builds on it. And most people, they don't realize that until after they've already made that decision. For this video, you might have thought, I just need to get pre-approved. But now you can see what's actually happening. You're stepping into a process. A process where every decision builds on one another. And if the first one is off, everything compounds on that. And once you see that, you can't really go back to looking at it the other way. But here's what you're still missing. Even if you understand this, and I hope this helps shift your perspective, most people still walk into the next step the wrong way. Because knowing what's happening and knowing how to respond to it are two completely different things. And this is where most people get stuck. They go into the first conversation not knowing what to say, not knowing what to listen for, and how to tell what they're being shown if it actually holds up. So before you talk to a lender, the next video is where all of this comes together. I'll show you exactly how to approach the conversation, what to listen for, and how to make sure you're not being guided in the wrong direction. Because once you understand that, you stop reacting and you start controlling the process.